All right, so it looks like we have a good group of people on the line here, so we're just gonna dig in and get going. So thanks everybody for joining us today to talk through metrics and reporting within Inventory Planner and what other systems you might need for kind of related reporting and metrics to find out what you need. So our goal today is to really take a look at the financial health of your company related to inventory, how inventory affects that, what metrics you need to be looking at, and then what you can monitor in order to improve those numbers too. So just a bit of housekeeping here. So the webinar is being recorded, so you'll get an automatic recording of this afterwards. I think it comes within 24 hours. So you'll get a recording of that. We'll also put it up on YouTube. It'll be available there. Feel free to use the chat, the Q&A that's at the bottom of the Zoom screen to ask questions at any time. So we have several people from the Inventory Planner team on the call. They can answer via chat in real time. And then at the end of the session, we'll also read through those and go through screen share as applicable, just so it's on the recording and we're kind of talking through what that is. But I expect that there will be quite a few questions that may be related to your particular situation. So we've left about 15 minutes at the end of this time so that we really have time to kind of work through those things. And then, as always, we want to know what your feedback is. Was this helpful? Did this answer your questions? And what other topics would you like us to cover in the future? So we do have a few webinars coming up. We have one next week. We'll give you the link for that. It's really like an introduction to Inventory Planner webinar that's going to happen next week. So that's good for new people on your team, or if you're new to Inventory Planner, it's a good way to see what the important sections are, how to create a purchase order, go through the major workflows. So definitely check that out. And then at the end of the month, we have a webinar for advanced forecasting techniques. And so that'll be a deep dive, really best for people who have a good handle on forecasting, a good handle on using Inventory Planner, and really want to step things up. So be looking forward to that, and we'll share the links in the chat here and afterwards with the webinar. So, okay, now that we have that stuff out of the way, here's what we're going to be covering today. So first up, we're going to take just an overall look at your company and how to get a general sense of what's the financial health, the inventory related health, as inventory affects the financial health of your company. How do we get a look at those things? Where are we right now, and take a baseline. Then we're going to dig into replenishment. My experience is there's never enough money to do everything you want to. So how do we prioritize what to buy and what can wait? So just figuring out what's most important in order to get the maximum profitability. Then we're going to get into overstock. I think overstock's overlooked a lot, but really is important to the financial health of your company, and we'll get into more about that. Then we'll get into metrics and reporting so that you can help coordinate operations. I know that we may have people on the call who are a one-person operation, so when you're wearing different hats, here's where you need to be looking for different things. Or if you do have a bookkeeper, an accountant, if you're working with a 3PL, you have somebody in your warehouse, we'll talk about how to coordinate information across those different areas of your business. And then finally, we'll take a look at what metrics are available when you're launching a new product and can help inform what that initial order for a new style or a new product is going to look like. So lots to cover. Please jump in with questions at any time, and we'll get going. So first up, with the overall health of your company. So just to lay a baseline and kind of tell you about my perspective in coming to this and kind of sharing with you a few key metrics to look at. So if we're thinking about our business as a money machine, we put in $1, we invest $1, and we want to get $2 out of that. And so there's two key parts of this. One, we want to turn $1 into $2 as fast as possible. We want to recoup our investment, and if possible, we don't just want to turn it into $2, we want to turn it into $3, into $5, into $10. So the two key parts of this are speed of recuperating our investment and then maximizing the return on that investment. So in our case, we're looking at this, the investment, the $1 that we're putting into it is our inventory, it's our stock. We're saying, here's what we're starting out with. And then on the other side of things, we're looking at what's the revenue, what's the profit that we can get out of this. So we want to figure out how do we maximize that and how do we get that done as fast as possible. So the first part, we're looking at a general overview here. So we're going to start on the total level, and we'll get into actual reports within Inventory Planner. So we're going to start on a total level because we want the big picture of what's going on. And then we're going to dig into it at a category, brand, or vendor level. I really like to get in on a category level. That's assuming that you have different types of product within your company. But I definitely see merchants, especially fashion merchants, who are very brand focused. This could be true of electronics as well, want to get in and look at either brand or vendor. And that's really what makes sense for that next layer down. But just know that that will still give you a big picture look at things. We're not too granular. We can see some good trends that are going on, and really hone in on maybe some problem areas or maximize things that are going well. And then we're going to get down into the product and variant level as we dig into things more. In terms of terminology, product is everything. If you think about when you're setting up your website, whether that's on Shopify, BigCommerce, WooCommerce, the product page is where that whole style or just kind of an overview of that product is. And then the variant is the red version, the green version, the blue version. Each one of those is the variant. It's the most granular level, but all of those live under the product. So that's like the parent, the variant is the child. So just make sure we're on the same page with terminology here. Okay, so the first part of that money machine equation is speed. So one metric that we're going to look at for this is sell-through. And I guess another caveat for what we're talking through today, I am simplifying this and just trying to give you a sense of what are a couple of key metrics to really start with and look at the health of your inventory. There's a lot more that could happen in terms of other metrics, but I'm giving you a starting place to really say, okay, does this look good? Does this look bad? What's some context to this? So starting with sell-through. Sell-through is taking your sales, meaning number of units sold, and dividing it by the opening stock. Typically, you'll look at this over a month. So let's say that we bought 100 units of a product and we sold 20 of them. That means we've only recouped 20, we've only sold 20% of what we originally bought. Unless we have some pretty great margins, we probably haven't even recovered our original investment in that inventory. So that's not looking so great. But if we're getting closer to 100%, that means that we've sold through everything that we've purchased. And in fact, so generally the higher the better on sell-through, but we can't actually get to a ceiling on this. You could even go through, you could even be at more than 100, meaning you're purchasing a couple of times a month and going through all of that inventory. And in that case, that might actually be telling you that there's more customer demand. You might want to be purchasing more inventory so that you're not missing out on revenue and running into stockouts. Okay, so in general, the higher the better, but you can't actually get too high on that, and it could be signaling maybe you want to raise your prices and not just purchasing more units. So that's something to think about there with sell-through. Okay, and then that number, what that tells you is you may want to take a look at your replenishment approach. So I mentioned maybe you're purchasing multiple times a month. You may want to think about, do we purchase more at one time? Is it more economical? Could we get a better unit price? And then if your sell-through is too low, you want to be looking at your overstock. What do we have on hand that's not moving? How do we get it out of here? Because it's really dragging down that number. So that's what you can do about that. So we're talking about speed, and now we're looking at maximizing what we're getting back on that investment, and we're looking at GMROI. So this is gross margin return on investment. What does that mean? It means we're looking at what is our profit over and above what our investment was in that original inventory. So that means, okay, the cost is what we've paid our vendor. Once we've recuperated that, anything that the customer pays us then is our profit. So over and above that. And we want to see what is our gross margin above our inventory investment. So the gross margin, return on investment, GMROI is a good place to get started and take a look at that. And so we talked at the beginning about how we'd start at a total level. Let's get over into Inventory Planner and we can take a look at that. So the two primary places we're going to be looking at today, here in the replenishment section, but also here, I'm going to come into reports and then inventory KPIs. So if we look at this, let's start on a total level. And we can look at, let's say the last 30 days. And then over here with this gear icon, here's where we're going to find all of our metrics that we're talking through today. So if I'm adding in GMROI, I've already got it in here. It looks like it's down here at the bottom. So I'm actually going to drag and drop and bring this up closer to the front of my report. I've also got Sellthrough, so I'm going to bring that up here too. Okay, so we're starting on a total level, and we're taking a look at things. So this 220%, this is telling us that we are going through, or that we have a really great return on investment. Our sell-through overall is 46%, so probably not great. That means we have a lot of items on hand at the end of the month. Actually, the majority of items that we had on hand at the beginning of the month, we still have at the end of the month. So that's probably not great. Then we can dig in here and look at a category level. So we have the big picture. Now we want to see what's happening on categories. And this is really nice because then you can see, look at our sell-through, look at how different these are by category. So accessories is really bringing up the end here. Things are not looking good here. So that might even be a category that we want to look at, either that we switch those things up in our catalog or even get rid of that category because it's performing pretty poorly. Whereas some of our other categories, the men's category here is doing really well. So we'd want to dig into that and figure out what's going well, what can we repeat, and really scale our business based on that. Okay, so that's kind of the process. We start at total category. We could even come in on the variant level here and see what's driving that information. Okay, so that's some big picture information. What can we do? We talked about with the GMROI. So if that margin is not high enough to cover all of our expenses, so sit down with your bookkeeper and say, what are all our expenses? Rent, salaries, fulfillment costs, shipping costs, etc. Are we covering all of those? Are we getting a profit out of this? And if the margin is not sufficient, you really have two options: raise your price or lower your costs. So I know easier said than done, but the raise prices thing, that's something that I had to do as a merchant. We got in and we saw that our most popular line of products was not even profitable. So we had to raise prices. Of course, we had upset customers. But during our customer service process, we were just transparent with them and saying, unfortunately, these were priced too low in order for us, to really be viable and make this work. We've got to raise prices. So that didn't make them happy, but they understood. Just being transparent about that. So I really feel your pain. You may need to dig into that and raise some prices there. Also talk to your vendors, see if you can lower costs. You could be using some forecasting to let them know what the demand will be in the future. That could be something that could help them plan so they can buy at cost or buy at scale and pass along some of those costs to you. You could talk about the ordering in minimums. See if you buy more at a time, if that lowers the per unit cost. So those can be some things that can help you improve your GM ROI. Okay, so overall, that gives us a sense of what our company looks like on a total level, maybe a category or vendor level. When we get down to looking at products, we get down to looking at variants, we can break these down into A, B, and C classes. So what does this mean? This is something that's configurable within Inventory Planner. So if we come to Account and then Settings, and we're going to come over here to Forecast, come all the way to the bottom. So A class means this is our best performers. This is our first 80% of our revenue. So if you think about what's the fewest number of variants that could count towards the first 80% of my revenue, these are all going to be A class items, B class are the next 15%, and C class is the final 5%. As you can see, this is configurable. You're looking at the defaults right now, but you can change this so that your A class could be the top 90%, it could be the top 50%. Just know whatever makes sense for your company, and you can really divide things up that way. By default, we're looking at the last 30 days. This can be good if you are looking at non-seasonal selling, but if you have a seasonal business, you should probably move this over to the last 365 days, because if you have great performers that really take off in the fourth quarter, if we're looking at the last 30 days, obviously we're missing that. So if you change that over to the last 365 days, then you'll get their performance last fourth quarter as we head into fourth quarter for this year. Okay, so that's ABC analysis. That'll help you look at your catalog, and we'll get into kind of how that applies once we get into the replenishment and the overstock a little bit later, but this can help in kind of cleaning up your product catalog. So let's dig into the replenishment. So just in case you don't have a money tree outside your window, how do you prioritize what to buy? So in this webinar, we're not going through the forecast methods and settings of Inventory Planner. That's the webinar next week. So I'm setting aside a lot of information for this webinar, but tune in next week if you want to get caught up on that. So, so we're coming into this saying that we have already fine-tuned our forecast methods for each of these items. We have our lead time and days of stock set up. And we've got our replenishment. This is showing the number of units we need to buy in order to meet customer demand during this time. So if we order today on the 10th, we'll get these items on September 24th. And then when they arrive on September 24th, they'll last until October 24th. So from today until October 24th, that is our planning period. And this will recommend enough units so that we can meet all of the customer demand. We're not going to miss out on revenue during that whole time. So it's not enough, though, to look at this column and say, okay, well, this is the highest number of units, so I should get that. I mean, I think that you can see where this is going, that items are going to have different profitability. And so I think it's really helpful to look at replenishment profit. And I'm going to scroll to the right here. So basically, we're taking the profit per unit and multiplying that by the number of units that we're recommended to purchase. So here's our profitability. So if we click on the column title here and sort, we will actually see that because items have different profitability, we'll see that, for example, here's an item that has 312 units that we're recommended to purchase. There's fewer number of units that we need for some of these other ones, but we have higher profitability. So if we didn't order those items, here's the profit we're missing out on. This is really focused on that. How do we maximize what comes out of the money machine? Are we getting $2, $3, $5? Okay, so prioritize here to really say we're making the most of our inventory investment. Okay, so that's replenishment profit. Then the next one is the newest metric within Inventory Planner, and hopefully many of you read your newsletter that we sent out last week announcing this new metric. So we've got to order, which is really related to the replenishment column that we see here in Inventory Planner. And I'm going to add another couple of columns here so that we can see how this is generated and really what it means. But this is taking a look at that original replenishment recommendation that we had, that the formula is saying, here's how many we need, right? And then to order is saying, okay, but we have some vendor considerations. So these could be minimums. So here's our minimum order quantity. We can see we were originally suggested to order about 1,800 units, but our minimum on this item is 3,000. So we can see that when this actually gets to the purchase order, it would need to be 3,000 units. Okay, so that's a pretty different story. And that gives us more information to say, okay, I'm going to need to have more on hand. I'm going to need to over order actually, if I'm complying with these vendor minimums and if I place this order right now. And just weighing out what does that mean in terms of recuperating my investment here. Another consideration that to order takes into consideration is UOM, which is units of measurement. This is our case size. This means I have to order 25 of these at a time. I can't order them in singles. So I can't order 1,202. We have to order in multiples of 25. You can see that we're rounding up here, and that'll be 1,225. Okay, so that just gives us a sense of what are those vendor constraints that are put on our original recommendation to see what we would really put on a purchase order. And I think hopefully you saw when I was adding to order, there's some related metrics, so we can look at the cost price of what that will be. So we have the to order, which is units, and we can see what that would be on a purchase order, as well as the profitability. So hopefully that will help, especially if you're dealing with those vendor constraints on your order. All right, then a very common question that we get is, how do I tell how long my stock will last? And there's a family of metrics that are very similar, but I want to walk through how they're different so that they can tell you exactly the information that you need. Okay, so the first one here is stock cover. And stock cover is truly just the stock on hand. I have 10 units in my warehouse. Here's how long the 10 units are going to last. Pretty straightforward. And we've got this available in stock cover in days, weeks, or months. So you can really break down how you need to see that information. Okay, so I think that's the most straightforward. We're going to get into some pictures to help illustrate sells out in first and sells out in. So both of these the second and third metrics listed here consider, yes, the 10 units that we have in our warehouse, but we've also got 10 units on a purchase order. So we're committed to 20 units total, and we want to know how long those last. There's a little bit of difference between these two. So first, let's say that it's July 1st, our current stock, we're going to be able to look at that with stock cover in days. That's just the 10 units in our warehouse. And our purchase order isn't going to arrive until September 1st. That means we've got a gap. We're actually going to be out of stock for the whole month of August. Sells out in first tells us the first day that we're going to be out of stock, that we're going to have stockouts. So sells out in first is going to tell us August 1st for that date. Sells out in looks at the farthest out date of all the stock that we're committed to. So the 10 that we have on hand, the 10 on the purchase order, what's the last day that that's going to last through, regardless of if we have stockouts in the meantime. That sells out in. That's going to tell us October 1st. Okay, so we can see here how sells out in first has the first day we're running out, and then October 1st is with the sells out in is basically the last day that all of that stock is going to last. So this is the situation where we have a gap before our purchase order arrives. But what if we don't have a gap? We'll get that purchase order before we run out of our current stock. So you can see there's an overlap in stock. No stockouts are happening here. In this case, sells out in first and sells out in are going to tell us the same date. Okay, because there's no break in the action that would kind of trigger that sells out in first to show earlier. So that's when they're going to show for the same date. So that's a quick explanation of that family of metrics. Very common question that we get just to see what's the current state of things. Basically, like, what kind of emergency do I have in placing my purchase order, I think is what people are getting at there. So, and you can see all of these in the replenishment report. We've got sells out in that is showing by default. So you can see the date as well as the number of days until you're gonna run out of stock and anything on order. So that's what that sells out in is telling us here. All right, so that's a bit about how to prioritize replenishment. I know that we went through that quickly. Definitely pop in with some questions. If you want to know more about that or have other considerations within your store, we can definitely talk through your situation. So now we're going to get into overstock. So rightly so, the replenishment piece of things is the first item of business. It's where we pay attention to first so that we're not missing out on revenue. Once that's under control, please pay attention to overstock. I think it's less exciting, it's not new, it's not flashy, but in terms of the effect of inventory on your company's financial health, it really has a large effect. And even if you think it's just sitting on your warehouse shelves, it's not really doing any harm, it can be doing something for you, and it can be costing you actual money. We're going to talk through this. So a couple key metrics to look at with overstock are both overstock retail and cost. This means the retail value of all the units that are overstock as well as the cost value. And the reason I say looking at both of these is because often, not always, but often, getting rid of overstock means discounting. So it could be that the actual money we'll get out of these items is somewhere in between the retail and the cost values. So within Inventory Planner, we're going to come here to the overstock report. Now, this is going to use all of the same forecasting methods and settings that we have by default on our account settings, as well as any customizations that we might have made back here in the replenishment page. And so remember that the planning period that we were looking at says that we are looking to plan through October 24th. So this says, here's how many units that you are forecast to have on hand as of October 24th. Okay, so here's the number of units. This may look like a lot, but we need more context because we don't know, maybe this is a hot seller and that's just 2 weeks of overstock, which is like not great, but not awful, right? I don't need to come up with a separate campaign. I can probably just wait it out and wait for that overstock to go away. But it could be that 5,200 units is 18 months worth of overstock, in which case that's a problem and we need to put some special effort into that. So we need more context on what's going on. So here's the overstock retail that we talked about. Again, with the gear icon, you can add in overstock cost to see how much can we potentially get out of this. And then one other thing that I want you to look at in the overstock here is these labels. So this is telling us more about how long are these items going to last. So you can see we have 17, 18 months on a lot of these. So we're really overstocked. The ceiling on our program is actually what's showing here is 18 months, so it could last even longer. So this is really a problem. This will help give you some more information. If you haven't already, it can be helpful to connect Google Analytics to your Inventory Planner account. This will show you metrics like page views and conversion rates, and it will add additional labels here, which I think can be really helpful. So when we're thinking about overstock, sometimes we know why things are overstocked. You know, trends changed within the market, or a marketing campaign didn't work out, or whatever it might be. Sometimes we know, sometimes we don't know why things are overstocked. And that information, I think, especially from Google Analytics, can give us more context. So for example, if we see something that says low conversion rate, that tells us we've got some traffic coming to that page, but it's not converting. So what can we do about that? We could maybe look at a new product image. We could look at tweaking the title. You know, maybe it's something to do with the pricing, but we know that there's traffic there. How can we make more use of it? So it's just like one more piece to the puzzle to help figure out why these are overstocked and how we can get some items out of there. So that's a quick look at overstock here. All right, one other piece when you're looking at overstock is the aging analysis. So we're gonna come down here to reports and then come to aging analysis. And what this is telling us is how long have items actually been on hand since we received them on a purchase order. So if you're brand new to Inventory Planner, you'll probably see that everything is here in the 0 to 30 days column. We're collecting this information as you are using Inventory Planner longer. So that's how we're able to track your stock history and stock detail there. And so you'll see this populate over time the longer you're using Inventory Planner. But what this is telling us is some of these items have been around over a year, from 6 to 12 months. And this is helpful not just for people who might have perishable items with a shelf life, but also think about if you are selling something that's trendy, or part of your marketing strategy is to have new and fresh things in front of your customers. If it's been around a year, it's not new, it's not fresh, it needs to get out of there. Also think about, this is where it could literally be costing you money, is if you are using a third-party logistics company, if you are selling on Amazon, shipping FBA, you're paying long-term storage fees, or you're paying storage fees to have those items on the shelf. You're paying to have this there that long without getting, so not only have you invested in the inventory, but you are paying to have it sit on a shelf. Get it out of there. move it out. So this is a time where we'll take that strategy again. Here we're looking at total. Let's dig down into what are some of these items, you know, to look at even specific variants for what are these oldest items, and really like focus on getting those out of there. So this is the aging analysis. This assumes first in, first out, and this information is based on what's happening with your purchase order receiving. Okay. So now let's get into coordinating operations. So here's where you make friends with your bookkeeper. Your bookkeeper is going to love this part. So we're getting into, your bookkeeper is probably asking you for the stock cost on a monthly basis, meaning the cost price is what you pay your vendor, and they want to know what's the total of that for everything you still have on hand in your warehouse, okay? So you can see this every day. Here on the overview, here's the stock cost, meaning the cost value of all of your inventory. And this is as of today. If you're like me, I always forgot to look on the day, and so I have to go back and look at what was happening on the last day of the prior month. Okay, so let's walk through how to find that information too. So we're going to come to reports and come into inventory KPIs. And so here's a situation where we're going to look at this on a total basis. I think typically your bookkeeper is going to want this on a total basis, probably not on a category basis. And then we're going to look at last month because they're closing out the books for August right now. And then what we're looking for here is closing stock costs. The closing part of this means it corresponds to the last date of our report here, okay? So similarly, if we added opening stock cost, that would correspond here to August 1st, but we need that closing stock cost. So now I've added that. So now I can report to my bookkeeper, here is the closing stock cost of what we had on hand on August 31st, so that he or she can close out the books for August. Okay, so that's making things easier, hopefully, for your life and your bookkeepers. Other related reports, so we do have a stock history report. This will show you the value of your inventory as of the first date of each month. So here we have this in units, we have that cost value, and then at retail, meaning what your customers could purchase. So this is, again, the first day of the month. This is the month view. We also, in this report, have this available by week. So you can see this here on a retail weekly calendar. So that's available for you to help coordinate with your bookkeeper or accountant. Another piece of information that bookkeepers and accountants often want to know are cost of goods sold. Now, public service announcement. Terms that are commonly used interchangeably but are actually different are cost and COGS, or cost of goods sold. Those are two different things. So let's walk through. Cost value means the price per unit that you would pay your vendor. So that's the price per unit you see on your purchase order, okay? COGS is, think about spell out the acronym, cost of goods sold, or think about cost of all goods sold. So that's the cumulative total of each of those cost prices for everything that you sold, okay? So again, you can come to the inventory KPIs. You can look at this on a total basis, and we have cost of goods sold already enabled here, so we can see that on a total basis. So you can see this will be corresponding to all the sales we had during this period. What was the cost value of all of those items? So this is looking at, are we recuperating our inventory investment during that time? Here's what that corresponds to, okay? So that ends my public service announcement on cost price versus cost of goods sold. Please let me know if you have any questions about that, and then we can use the terms correctly. Okay, so one last one for your accountant and bookkeeper, coming to reports and then good received note. So this corresponds to your purchase orders, and this says, here's how much we received during certain months and by supplier. I think this will typically be what your accountant or bookkeeper is looking for, is by vendor or by supplier. How much did we receive? So number of units, but also the cost value of that. So this can just help you reconcile what happened between the purchase orders that might be in your accounting system and what you actually received. So this is a good way to make sure everybody's on the same page. Okay, so now that you're a bookkeeper and accountant are really happy, and you're happy because you can easily get this information for them, let's go over to another area of your operations, receiving and warehouse. So this could be in-house, this could be a separate 3PL that you're using. Especially if you're using a 3PL, they very often want to know what is coming, who's it coming from, how much is coming. Okay, so that's like the constant battle with the 3PL is figuring out, are we on the same page? Do they know what to expect? So just as this good received note looks historically at what those purchase orders were that came in, we have a complement to that called the delivery schedule. So that's going to look in the future at what all of these purchase orders are that are open, they're scheduled, we've placed these with the vendor, and here's when we expect them. So inventory planner users, be sure that you're paying attention to that expected arrival date as you're looking at drafting your purchase order. So by default, it's based on your lead time, but if there are special considerations, it's really important to update that so that we're getting accurate forecasting information for you, but also then it's reflected accurately here on the purchase order delivery schedule. So this will show, okay, from our US supplier, here's how many units we're expecting within September. If your 3PL needs more information, needs more detail, okay, is that in 3 shipments? Is that in 1 shipment? Then you can come back here to your purchase order and transfer section, and you can actually pull a report for them that will show, okay, let's come up here and use our filters. We're gonna say, okay, just from this supplier, and then we're gonna look at expected date is from today through the end of the month. And we'll apply those filters. And then we'll be able to say, okay, here are the purchase orders that are coming. We could even filter then by the destination warehouse. So for a particular location, here's how much is coming. And then from here, you can export this top item. Purchase order list will basically be a reflection of what we see on the screen now. It's really a summary. The second option is looking at each item and how many of each of those items is listed. So this will be a lot more detail, purchase order line items. Okay, so that will give you a spreadsheet that you can share with them to get that information. So that's looking at how to get everybody on the same page in terms of operations. All right, last section before we dig into some questions is, so inventory planners set up really to make recommendations for replenishing, meaning we have sales history on items, we know some of their behavior, and so we can make a recommendation on what that looks like. Obviously with new products, we don't have that data. So we're flying blind a little bit, but there are some reports, there are some metrics that can give us more information so that we can make a more educated guess about what that initial order will look like for new products. So for that, we're going to come back over here. So under reports, we're going to look at the assortment report. So we're going to talk through a couple use cases here. So the first is really like, how do we get this information for our new products? So we want to think about our new products that we're looking at. What things do they have in common with items that we already sell, that we do have data on? Okay, so we're trying to think about what do they have in common. So one thing we're going to do here is the view for this, we're going to come into option sets. So this goes back to your home platform. This means all those drop downs on the product page, color, size, flavor, any of those drop downs that your customers choose from. Each of those are option sets, and so we show performance per option set here. So let's come in and look at how each of the different colors that we present to customers, how those perform. Okay, so sales for inventory planner, that's number of units. Here's how those sell. We can see that this is sorted by revenue. So we have a sense of that. This is looking at our whole store though, which is helpful. But again, try to think about our new product. How similar is it to something that we already have? So can we add additional filters for a certain category because we know that we're going to be launching this in the dress category? Or do you have certain tags, vendors? Think about how you can kind of whittle this down to make it as similar as possible to data that we already have. And then this tells us, okay, within the dress category, here's how these different colors perform. And then I can create that initial order and say, all right, well, orange is our top performing color, so we need the most of those on our new order for our new item, followed by green, purple, etc. Okay, so this is just helping to paint the picture and say, here's some data we do have. Okay, so that's one use for this assortment report, which hopefully can help you figure out how many and of what to purchase for your new items. Another use of the assortment report, and this is not necessarily for new items, but is looking at just overall, how do we figure out what the performance of our store is? So if we're looking at categories, we're looking at, performance across all of our categories. Well, maybe I want to see how one of my suppliers, one of my vendors, performs across all of these categories. So I'm going to come in here and add a filter for the US supplier, apply that filter. Now I can see the performance of this supplier across all of my categories. So here's the revenue that's coming in. Here's the number of units we're selling, the sales for this supplier. So this is another way that we can see, how's this vendor really performing for us? Again, you could bring in different filters. So this could be tags, brands. You could even filter down by warehouse. We're looking, at a combined view here. So there's a lot of ways that you could really kind of like slice and dice this information to get a better sense of what's happening across your store for performance. So that wraps up a whirlwind look at different metrics and reporting available within Inventory Planner. I think I saw some questions pop up during the talk. So feel free to either add more questions or more in the chat, and we can walk through those. All right. Basil, did we have any questions come in or something happening during the talk there?
I had one question that I did answer there, just about importing units of measurement and MOQ. I haven't seen others. Do feel free to type into the QA box if you have questions. Of course, if you're digesting this incredible information that Jill has offered you, definitely feel free to keep exploring. You're always going to find us there at the bottom right chat box. You'll find a ton of useful articles, and you can always ask us questions there. So we'll be happy to guide you to some of the right information or instructions to kind of help get some of this in place. We do have another question. Here we go. Oh, will we get a copy of the session to watch again?
Yes, definitely. So it is being recorded. You'll get an automatic link to this sent to you within 24 hours. We're also going to post it on our YouTube channel, so it'll be available there. If you haven't checked out our YouTube channel, we have a lot of information. So we've got other webinars that are recorded there, so you can see long form content and really like a deep dive into things. We've got quick tip videos, so those are 2 minutes or less to really take a look at quick things that are happening for better use of Inventory Planner. We've got things related to general forecasting that's not even specific to Inventory Planner. So definitely check that out. And as always, just let us know what other content that you would like to know. One thing I was just remembering that I forgot to mention during this session, that's applicable right now as we're looking towards the holidays. So remember, you're looking at your margins, you're looking at what your profitability is. Oftentimes during the holidays, you're offering discounts. So just factor that in when you're planning your margins and your profitability and your cash flow during the fourth quarter, that could take a hit due to promotions that you're running. It may not look like the rest of the year in terms of what those margins are. So just one thing to keep in mind right now as you're planning for the rest of the year. All right, I think that you said we had a question about UOM and MOQ. So here in the catalog, you can manage a lot of information about your items. So if you come here to vendor attributes, that's where you're going to see that MOQ and UOM field. And even if there are items where you can source from more than one supplier, so that's what these top couple of items are showing us. So we've got one item, it can come from either one of these suppliers. So we could have different cost prices, we could have different references, different product names, and different MOQs and UOM for each one of those. So you can see that, you know, we could put in, maybe we have to order in multiples of 10 from this supplier, but multiples of 25 from another supplier. So all of that can be customized if you're able to source from more than one vendor for one item. All right. Well, if we don't have any other questions, I think we'll just wrap things up. Again, you will get the recording of this. Always let us know what other sessions you want. We will follow up with links to other sessions that we have coming up both next week and at the end of the month. And thanks so much for joining us today.